Welcome back to Investing Rules. Today, I want to talk to you about a company which is really strong, both in the financial sense and also in the sense of it's a company which is producing these amazing, powerful machines which are used in a variety of different sectors. And I think this is a company which can generate a lot of money for your portfolio. This company is CAT. Let's have a look at what they do. CAT, as I've just said, is a company which produces vehicles for construction industries, for resource industries, which means things like mining, energy and transportation, and then there is a tiny amount of money they generate in other areas, not important to focus on for the moment. So you can see that the majority is coming from energy and transportation and construction industries. And the most interesting thing I think from this table here is that in every single business segment, they are generating more money than they were in 2017 in 2023. So you can just look at every single sector here, much bigger on this right hand side, which is now than just a few years ago. So financially speaking, this is a very, very successful business. Let's delve a bit more into those segments though. So here we're actually looking at construction industries, which is one of the larger business segments, as I mentioned earlier. What you can see here is that CAT is a company which has a variety of products. It's got a very diverse portfolio of different vehicles that it sells. And you can see some examples here, excavators, earth movers, other sort of generalized loaders and tractor sort of products. The thing which I think really jumps out to me here is that these are very, very specialized vehicles. You can just see at the sort of design of these things that these are not vehicles that any random company is just able to say, oh, let's manufacture these. These are really, really highly specialized, and CAT has been building these for decades. So they are a real leader in the space. They have a monopoly on some of these really specialized products. So if you just think about this, obviously this is a company which has really, really strong competitive advantages because it's got a real dominant position in this market of building these really massive and expensive construction vehicles. So that's something to keep in mind. And I think that's reflected also, if you just look at this graph, you can see that, as I've mentioned earlier, it's generating more and more profit. I mean, just if we just look at as a sort of straight line from 2017 to 2023, obviously it's going up and down. But the fact is, it's generating more money every year, and the margin is from 17% in 2017 has now grown to 25%, which just shows its sort of pricing power and the real efficacy of this business model. And this is just one business segment, so let's have a look at the other ones. Next business segment is resource industries. Now, I've said that refers to mining, but obviously that is in terms of the whole mining process, and obviously, of course, it refers to oil extraction, all of this sort of thing that involves natural resources and getting them out of the ground, basically. So you can see it's got an even more specialized portfolio of vehicles in this business segment. Some of these are very, very distinctive. You'll recognize these sort of vehicles. And obviously, CAT is the main manufacturer of these vehicles around the world. So when you see a mine, you will see CAT mining trucks basically driving around there. The other thing to say is that, of course, it's a very similar image in terms of the profit and the margins as we saw in the construction segment. And what I didn't mention actually with the construction segment is that when this graph does go down here, obviously 2020, I think we all know what happened then. CAT is a very cyclical company. It does depend a lot on construction, and obviously during COVID, we weren't really sure whether we were going to be constructing lots of buildings and that sort of thing, or extracting natural resources. So obviously that affected massively the ability of the company to make profit, although obviously it was still profitable during that year, even in spite of those issues. So this is a company with a lot of financial strength, and with the exception of coronavirus, it's basically managed to grow that profit, which is very, very impressive. And obviously the margin, as I say, and as I mentioned with the previous segment, is also increasing. Just love looking at these vehicles, which are just so, I don't know, I think that's maybe the child in me which really appreciates these interesting vehicles. Let's look at the final business segment, and then we'll go on to some of the financial considerations with investing in this company. Pretty quick on this business segment because I've basically told you the story of the company already with those first two, But what I think you should get a sense of is that obviously this company is also generating some other interesting sort of products which don't necessarily match up necessarily with your image of the company as just being focused on construction and maybe sort of mining vehicles. It also is working on manufacturing locomotives, trains, and it also designs engines, pumps, these sorts of things, components for basically vehicles and the energy industry. So that's also something to keep in mind. Let's now talk about some of the financial considerations with investing in this company. Obviously, one of the most important considerations when you're going to buy stock of the company is the price of the company's shares. What is really interesting for me just from this graph, instead of just talking about the current price, is that this is a company which has absolutely compounded wealth over time. So 1984 shares were at $2, and now we're talking about $328. So it's a company which has grown massively since that time, and you can just see a lovely graph just going up and up over time. And I'm not a sort of momentum investor or just looking at the graph, technical analysis or whatever sort of thing investor. I'm a very much a value investor, but this is a very nice looking graph. And I think if you invest in this high quality company, you can be sure that you're probably going to do quite well over time. Now, in terms of the valuation, 14.83 for a PE ratio is pretty modest. Obviously, we could get into other ratios and that sort of thing to really analyze how much this company's worth, and I may do that later in the video. Dividend yield is another interesting thing to say. This company is a dividend aristocrat, which means that it's continually increase those dividend payments over time. So this is a company which is also really, really attractive to dividend investors. Let's have a look at the valuation. I did say we'd have a look at that, so I will just give you a little insight into how much I think this company's worth now. You'll know that my preferred method of roughly valuing stocks is with the discounted cash flow method. Now, you can use calculators for this sort of thing. I've just got this very simple one here, which won't go into much detail in terms of a very detailed prediction, but I think that's usually the best way to do it because it is quite difficult to forecast how much a company is going to earn in the future, and it's best to have a rough idea. Then take that along with the other information you have about a company and the degree of the undervaluation before making an investment decision. Now, based on this calculator, CAT is undervalued, which is really great. I would usually use a slightly lower discount rate than the default for this calculator. So, in fact, that does give it an even higher discount to the fair value as calculated by this calculator. Now, CAT is also a company with a positive tangible book value. That reflects for me a very healthy balance sheet, which is good. So it's a company in a really, really strong financial position. I would usually add that into the valuation as well. We can experiment actually with a slightly lower growth rate for CAT. Now, it has had a 13% growth rate in earnings over the past 10 years, but we may want to be a slightly more conservative, and in that case, we might put something like 9%. But as you can see from this indicator here, we're still substantially below fair value even on that basis. So really a company which is looking really, really undervalued on a number of metrics. And even if we put there, let's see how low we can go before we arrive at the fair value. 8, 7, 6. So this company can grow its earnings at a rate of less than 6%, and based on my calculations, it's still undervalued. So a really, really undervalued company from my point of view. I hope you enjoyed this video. I can certainly do more videos, more detail on CAT if that could be interesting. Maybe have a look at the balance sheet and that sort of thing. Please do let me know. Other than that, I hope you enjoyed this video, and I will be trying to cover some other companies that people are interested in. So just let me know if you enjoyed this video in the comments, and I will try to make some more soon. Thank you very much, and I'll see you in the next video.